Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the Market Site studio, we have Bob Goldsmith. He's president of Northern Edge Advisors. We're going to take a look at what's happening in the M&A space. Bob, it's great to have you with us. Welcome to Trade Talks.
Thanks so much, Jill.
And as we know, deal flow has certainly been a little bit less active than it was in 2020 and 2021, to say the least. What industries continue to see a lot of activity?
Well, I would say in the middle market that we're in, there's still professional services are still strong, healthcare is strong, there is manufacturing is still strong, but in this part of the market, it's not an investment thesis about the industry. It's really more about the specific business and the quality of that business rather than, an investment thesis about a whole industry.
But that really was something that came to light following the amount of flow that we saw in 2021 and kind of shifting gears and focusing more on individual companies, to your point, how management is executing and not necessarily, because you're in the tech space, you kind of get a rubber stamp.
Right.
Right.
Well, that's right. They are, but what we're seeing in this part of the market, while we're off the peaks, the middle market, I would say, is still having, the volume activity is still high from an historic level.
Yeah. Well, are there any challenges specific to the tech space?
To the tech space?
Yeah.
Well, I think that within the tech space, the issue is that everyone is searching for profits, right? It's not just revenue growth, it's profits
right.
Going down.
And when you think about the macroeconomic environment, we have rising interest rates, we have inflation, there's been certainly more volatility in the market this year. What are some of the challenges and opportunities that you've seen more broadly in M&A?
Right, so what I think is the opportunity is that there's not one exclusive thing across the M&A market, but rather different industries are being affected in different ways. And so while we're not at the, while we're off the peaks, the volume is still pretty high. And what we've seen is that buyers are now really focused on recession risks. And so as a result of the recession risks, they are really looking at, everything they look at is within that scope.
Right.
So they are, can we do it again?
Well, we're actually live, but so let's switch gears and talk about your clients specifically when they're considering selling their businesses and what they need to take into account for companies both on the buy and sell side.
Right, so the trend that we're seeing is that, whereas a year ago, whereas a year ago, sellers had to explain how they would perform in their performance, how they're performing in the
right.
pandemic. Today they have to explain how they're going to perform in a recession. So it's incumbent upon them to be able to show how they will how they performed in past recessions, how their cost structure, how much is variable versus fixed, and how they will how their customer base is
right.
working in that environment. And then they also, they have to, a seller will have to, we think it's very important for them to be able to have very strong financial reporting. So within the middle market, right, these are not audited companies. So we're telling them that they have to really have a very strong position on their financial reporting because buyers are going to ask very tough questions to them. Right. And they need to be able to respond accordingly and give all the information and analysis that they need. And so versus a year ago where we were being asked for information on a quarterly or monthly basis, we were being asked for that information on a weekly basis.
And that's what we were talking about at the top too, how the way things are being valued now and perhaps being valued 4 or 5 years down the line and not having a very clear path to profitability or consistent revenue generation, companies aren't really getting that pass like they might have in the past.
Right, that's definitely right. So they just have to demonstrate, I mean, within the tech sector or other sectors, they
right.
really have to demonstrate how they're going to get there. So they're not getting a pass on that. They have to show that they have a very clear plan to get there, what the investment is. They have to give a buyer of a business real comfort that they're not going to have to, they're not going to be material capital expenditures that are required in the near term. So there has to be a very clear pathway to.
And you had mentioned that you deal mostly with mid-market companies. Right. Explain to us what that is and what the differences are with the other levels of markets.
So a mid-market company would be we consider companies within the 10 million to 500 million revenue
right.
range.
And are they younger companies or older companies or that doesn't
A lot of these are family businesses and other businesses that have been around for 20, 30 years. In this current environment, they're thinking about having a sale because it's been, the last couple of years have been really exhaustive. So they may have lifestyle reasons or time reasons, right. or want to spend their time doing something else. But these are companies that have grown to 50, 60 million in revenue, and now they're considering their options. The owner may want to get out of the business,
Like a cash out,
right,
ready to
wanna cash
retire.
out,
They want to
wanna-
cash out. Don't
right.
want
Or
the
they may need an
headache.
investment to grow. Exactly.
All right. Interesting insight as always in the M&A space, Bob. Appreciate it, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.